Hello, hello. Hi, Kubi. Welcome on the Gelato podcast. Nice to have you here. How's it going?
Hey, Lewis. Good to see you, man. Good to be here.
So yeah, I'm looking forward today to chat with you about pretty much all things Gattaca, what you guys have been building there. But before we go to Gattaca-based sequencing on Ethereum, based preconfirmation, and what it all means. Actually, you guys have a history in Ethereum, right? Like you're running one of the biggest block builders. So do you want to let us know a little bit about that? How did that come to be? And yeah, what is it like? What does block building look like nowadays? Yeah, what's the story there?
So how far back do you want me to go? So we have a history building blocks, but before that, we also have a bit of a history just operating trading strategies ourselves. And yeah, depending on how far you want to go back, I can go into that as well if you want.
Sure, go all the way.
Okay, cool. So all the way back. So our initial foray into the space basically was by running some proprietary trading strategies, and specifically focusing on delta neutral, sort of not taking a lot of directional, zero directional exposure in terms of the volatility of the assets. And so this was solely focused on centralized exchanges. So your normal sort of market making, arbitrage, a bit of liquidity provisioning. And we did all of this without really coming from a trading background either. So my personal background is cybersecurity, software engineering, but had a bit of a knack for writing bots just like for fun. And we did try writing some bots for the Forex market, just was before crypto, but then very quickly realized that just due to the permissioned and privileged access you needed to have to run that type of strategies, you wouldn't stand a chance. But then when we dabbled in crypto and saw that this is like a fully open market structure, this became super interesting, and we basically got our hands dirty. So that was the early beginning, and then it worked fairly well. We scaled up the team a bit, but then also realized that given our background is not really HFT trading, that once the market really got competitive and the big boys moved in, we're probably not going to sustain our edge for very long. And so this was also around the time that DeFi summer happened, and the on-chain world took off. And so we started shifting a bit more resources from centralized exchange trading to we called it on-chain trading, obviously now called MEV. But then on top of that, we also got a bit pilled by this concept of what we called, or actually this guy Ryan Zurer called the keepers, and he wrote about this in 2017, and just this realization that basically everything on chain, or the blockchain itself, is basically the state machine, but you need an external actor actually to execute and trigger state transitions. And so generally protocols will have some incentives baked in for external actors to come and do some work for them. And so this was just super fascinating as a concept, and thinking about, okay, blockchain and systems and DeFi taking off a lot more, and all types of applications being on chain, that there's going to be a lot more work to be done for these keeper style systems. And so that combined was like, okay, the past is centralized exchange trading, the future is on chain. And with this realization of keepers, we're like, okay, we're going to double down on DEX trading, or on-chain trading mostly. And so we did that fairly well, also using a lot of the knowledge that we just build up building low latency systems for centralized exchange trading. We had a big edge. But then, as most MEV traders know, a lot of the edge then comes from really understanding the intricacies around, let's say, the EVM itself, the specific smart contract of the dApp that you are trading on, even consensus and the P2P layer, depending on what ecosystem you're trading. And so we really became familiar with the bowels of the EVM and EVM-based blockchain systems. So that kind of was the big sort of first era of what we did in crypto. And then the merge came along, and with the merge, this idea of PBS, and obviously the key point of PBS being that, hey, with the proof of stake system, because of MEV, there's this centralizing force on the proposer set or the validator set. And so let's decouple this from the validators who should stay maximally decentralized. So then we're like, hey, okay, looking at what is the job of a block builder and what are the key capabilities that are needed to be successful at this. And it basically ticked all the boxes of the things that we had done in the past, which was building very high performance systems, really understanding the intricacies, very fast simulations, and so on and so forth, shuffling data around the globe. And so we're like, hey, our sort of dream of running these keeper bots that basically help power and is part of the economy itself or part of the ecosystem, and not just a trading firm that is just trading from a P&L perspective. Like block building was this unique sort of infrastructure piece that was a service provider of sorts in a permissionless ecosystem. But at the same time, you get to solve all these very interesting technical problems. And so that's when we're like, okay, this is probably given all the things that we've done in the past, this is something we really want to double down on. And even though we are still running our trading operations, we're like, okay, we're gonna burn our boats, we're gonna stop all the trading, and we're gonna solely focus on doing one thing and do it really, really well. And so it took us a bit of time to then launch our first block builder. So the merge happens, I think it was September 15th, 22. And then we started building or transitioning or repurposing some of the infra that we use for trading and turning that into a fundamentally from scratch written block builder. That was in December 22, and then officially launched Titan, I think, in January or February the next year, so 23. And then basically slowly started grinding and working our way up to become today the largest block builder on Ethereum. And so this is a bit of the history. And obviously now that we are solely focused on block production itself, there's a lot of infrastructure and different parts of the pipes that are interesting, and different kinds of services that we focus on top of just block construction. But at the core, this is still sort of what we do.
Cool, nice. That's an insane backstory you have going for yourselves there. So you basically worked your way up to become the most dominant block builder on Ethereum. Actually, let's talk a little bit about block building, and without you sharing too much alpha, how are you able to grab market share there, right?
Mm-hmm.
As I sort of observed the block building space from the outside looking in, it started with more like there were a lot of searchers submitting stuff, and then these builders came. Originally, you had these searchers, I think, submitting stuff to Flashbots. There was an early form of how this worked, and then PBS came along and builders came along, and it seems like this searcher market went away a little bit and was sort of verticalized or internalized by builders. Is that correct to say, or roughly speaking, how are you able as a builder to or how are you able to compete? Because the way I understand it, ultimately, you need to bribe or you need to pay the validators the most for a block auction, right? As a builder, essentially, whatever you do, you build the block in such a way that you are able to pay the validator the most in fees, which basically comes down to extracting the most MEV, so that you can still, as a builder, make a profit on every block, even though you have to win this auction for validators, right? So yeah, is that building? Does it mostly come down to you internally finding all of these opportunities? Maybe even your own capital liquidity in there that contributes to unlocking some opportunities, or is it purely technical, or is it a financial trading operation as well? Is, I guess, my question.
Mm-hmm. Yeah, I mean, very good question. So I can tell you that you basically have different classes of block builders, and so You have what I call the pure infrastructure builders, that I also call the neutral builders, and then you have vertically integrated builders. And to answer the first question, so the searcher market still very much exists. There's a lot of searcher teams out there. In general, like with these type of competitive markets, there's always like tend to be a winner takes most across like different types of strategies. So you might have sandwiching, for example, is a very like big strategy, and there's like one very prominent sandwicher. Then you have you have a few other competitive ones. You have atomic sort of arbitrage, MEV, where you have teams that just specialize on backrunning. You have teams that specialize on liquidations, for example. And then there's this big category, CeFi, DeFi arbitrage. So basically arbitraging between centralized exchanges and on-chain venues. And so across these different strategies, you generally have either one dominant player or very few players that dominate those categories, but that all exists. Now, how does that play into block building? So first of all, when we started block building, like I said, we consciously made a decision to stop trading because we realized that if you keep your internal trading operations, you basically always have this inherent conflict of interest, because you are, however good you are, I'm currently not aware of any trading firm, no matter how much resources in terms of capital or like human resources, that is absolutely dominant across all trading strategies. And so, and as a block builder, you kind of need everything. You need all kinds of order flow or consumers of block space to send you transactions that basically pay fees so you can maximize the overall block reward. And so if you trade yourself, inherently there'll be some categories of players that you'll be trading or competing against, which will put you at a disadvantage. And so the second part for us was also this sort of startup cliche, do one thing and do it really, really well. And just the mindset and I would say the core fundamentals that drive a team, if you are trading operations versus, and block building is kind of a supplementary business, or vice versa. Block building is your main business and you also have a trading business, is very different than if everyone on the team is really focused on building the best block builder as a service, right? And that is both for the block space consumers, so all the people that send you transactions, but also, I guess, the other side of the market are the validators, right? That want the best type of block given certain rules or constraints. And so those were the two guiding principles, and that was also one fundamental thing that we saw ourselves setting ourselves apart from other teams that were in the space. Okay, so then when we started, we stopped our trading operations. We basically focused initially on blocks where we knew that we have enough transactions to be competitive, because you needed, as you know, there are public mempool transactions, and there are lots of transactions that are in the private mempools because of information leakage and users not wanting to get front run and MEV protection, all of that stuff. And if you don't have a reputation, no one knows you, there's always a risk of sending transactions privately to a specific block builder. So from that perspective, we had basically no order flow or no private order flow. So we solely focused on blocks that were only built out of mempool transactions. And we are like, okay, we will build the best, we call them vanilla blocks. And so that was just basically a function of all the internal technology and the latency of, does a transaction hit the edge somewhere in, say, Tokyo, but the proposer is in Northeast Virginia? How do you get the transaction there as quickly as possible if it comes in the last millisecond before the slot ends? Or you have this, set of transactions, what is the optimal sequence in order to get the best block reward? And so these were the problems that we are focusing on, and then we managed to get a bit of market share. And so with that market share, and then also having a few relationships, because we used to be a trading firm, before, we went out to some people like, hey, look, we have a block builder, it works. We don't trade anymore synchronous transactions. And that kind of was the stepping stone of, okay, now we were able to target certain types of strategies that these guys were covering, and then we were able to expand our market share. And then now the final part of your question, so do you need to be vertically integrated? So given that across specific categories, there tend to be market leaders in terms of MEV trading, if you are one of these market leaders first, then you have sort of unique and dominant order flow. And so if you have a block builder as well, you basically have order flow that no one else has, which was also the birth of exclusive order flow. And there were like a few big trading firms, or prominent builders at the time that were the largest builders, which were rsync and Beaver Build. They were both very, very competitive on specific types of trading strategies. And they also run their block builder, which basically gave them this unique edge that one, they had very fine granular control over their trade execution, but then also they could pay fees via those transactions that they are trading, that it could then basically internalize as well, right? So that gave them that additional edge in terms of market share, but also in terms of like recapturing as much of those fees, and internalizing them as much as possible. So that kind of was, I think, the time where most people were like, oh, so if you're not a big trading firm, you have no chance of competing, because then you don't have access to that type of order flow, which is true. If there's no one else that is as competitive as these guys that doesn't operate their own builder. And so from our perspective, then we sort of reached this plateau and we're like, okay, we can never breach that market share unless there are new competitors that can basically cover those types of strategies and that will submit because they don't have their own builders to us. And so we really focus then again on, okay, what kind of features can we offer to these like customers so that they wouldn't need to spend that much capital and resources to build out their own builder, but they can just use us because we are a neutral builder and there's no conflict of interest. And we can, again, use all the mental sort of capacity that we have and all the focus to just build the best services for those counterparties. And that then got us to a place where we managed to attract that type of order flow. And again, that then increased our market share and so on and so forth.
Okay, so to sum up, your strategy was not to definitely hold your trading operations, to not have a conflict of interest, and then you build some vanilla block building strategy, and you build some reputation and ultimately distribution, and this way you got access more and more to exclusive order flow, pretty much, would you say? Would you sum up? Like, you're the most trusted builder, attracting the most order flow because you don't have a conflict of interest and you have the tech, the infra to have a good vanilla baseline for block building.
Exactly. So the conflict of interest, but then exactly also the second point, which is we didn't have this internal trading team, and to an internal trading team, it's a nuance to have to deal with outsiders. It's like, oh, now they ask us these questions about these bundles and they want this feature, and it's just a pain. You just want to do your trading and use this builder as a thing to get edge on your trading, versus the mindset of, hey, I'm actually an infrastructure provider. I'm building this for the counterparty as a service, right? So I think it's a very subtle or minor thing, but that has a lot of impact in terms of like what the experience for a counterparty is when interacting with you versus someone else.
Mm-hmm. And what's a quick explainer why block building is such a winner takes most, or like there's basically just a handful of block builders on Ethereum, and you roughly what's your market share there on average?
So recently we have around 50% of the blocks on mainnet, and I would say there is just this flywheel, right? Of the more market share you have and the more trust you have, the more people are willing to send you order flow. And generally also the less proactive you have to be, right? Because if you're no one, you really have to go out there and knock on the doors, which we had to do when we are smaller. But now that we are large and that we have existed for so long and we have never really screwed anyone over, and like there's this like trust because we had so many opportunities to screw people over and make a lot of money, and we didn't. It's just much easier to attract order flow. And also, I guess the reputation of, hey, when you come to us and you request something that is useful, like the turnaround times, if it makes sense, usually are pretty short because this is our business and we sort of care about the customer, sort of the usual cliches. Yeah, so just has like this flywheel, and then because this is the tricky part, because often you have teams that are really good at building this robust infrastructure and this really nice service for counterparties, which is, I think, just from a core different from teams that are very focused on building something that is better in terms of optimizations, which is a bit more PvP. And we noticed that ourselves very much when we are hiring engineers for our team, because we are in this like very unique sweet spot where it's not a trading firm and there are people that will like trading and just, caring just about the money. But then there's people who are more like service oriented, right? And we are in the middle. And this is such a thing where you need to be service oriented, but you also need to be really performant as well on the technology side. And I think because of our background and sort of what was really appealing to us, I think we're one of the few teams that build up that capability.
Do you interface with applications surface area directly where really the user is almost there, or are you more interfacing with more like back office operations? I know that at Gelato, we are submitting to Builder APIs. We obviously have a bunch of transactions that we submit every day on Ethereum for our various services. Our Paymaster Bundler service, our Keeper automation service, the OG thing that Gelato did. Funny that you mentioned that earlier. It's also the OG vision that actually Gelato started with, like a Keeper network. Are you, if you go down, if you ever did go down, who's complaining? Who's coming to you, knocking at your door, complaining immediately?
Yeah. So I guess if you think about the classical category, you will put us in the B2B category and not B2C. So we rarely interface with consumers or individuals, but rather companies. So whether that's larger trading firms or even smaller trading firms or order flow auction providers, that like aggregate a lot of transactions because all RPC providers and so on and so forth. So it's rather B2B relationships, which I guess again is something that's more natural to us because we are not very loud and we don't make a lot of noise and don't do a lot of marketing and those kind of things. So B2B is just a more natural fit for us.
And other two sort of things you offer to one B2B party, it's, hey, I can get you included in the next block as fast as possible. And to the other, it's more like, I can give you this much rebate if you give me your transactions. Like that's the order flow auction, right? So is it more of, hey, essentially companies use you because they get rebates, or is it because they want to be included very quickly in the block at a certain slot?
Yeah, it's both. So everyone wants to be included now and wants to pay as little as possible, right? And so I think this is the fundamental tension that exists. You have the block space sellers, which are the validators, and they're like, I want to maximize how much I get paid for, producing or like being able to propose the block for the current slots, right? And then you have the block space consumers. They're like, I want to pay as little as possible, right? But I want to be included now at the best position. So like and then depending on how much they want to optimize for inclusion versus how much they're willing to pay, that's the sweet spot of like what's the best sort of execution you can give them. And there's a lot of technology involved here, obviously, and conceptually it's the same thing as basically paying up. That's the idea behind a priority fee, right? Express like what's the urgency for you to land in a specific position in the block, or in what slot do you actually want to land, and how much you're willing to pay generally influences that. And I think as the market is becoming more mature, it used to be very crude, and so there's some estimation of what you need to pay, and then you can dial it up by a few percent and then or down, and that will influence your inclusion time. If you don't do anything sophisticated, the more sophisticated you are, the more precise you need to be about how much you pay. But no matter what, it's impossible to predict or say what's the exact right amount, because even the builder doesn't know until like the block construction process is ongoing and they have a full view of what everyone else is willing to pay. And so again, I guess holistically, it's about finding the sweet spot and making everyone happy. And if you do that better than everyone else, then maybe you also get a small piece of the pie.
Okay, cool. To wrap up the backstory, and I mean, it is very much related to what you do now with Gattaca and space sequencing. I feel like we could record a whole other podcast just to talk about what you guys are doing at Titan and MEV and PBS and the future of MEV and PBS and other chains. And that's a whole podcast episode for another day. But yeah, before we ask questions about Gattaca and base sequencing, would you say that, given that obviously you have 50% market share and so on, would you say that this is like the inevitable outcome of the decentralized consensus design of Ethereum? And is it a problem? Like, do you think this is like a real censorship risk, or do you think more like, oh no, this is just the market being the market, and like technically speaking, this is just competition at the end of the day. So if you guys disappear for some reason, someone else will take over immediately, and the blockchain will keep chugging along. Like which side are you on there?
On both, actually. So there's certainly a degree of censorship that builders can enforce, and so I think, and we have spent some time thinking about what are the actual problems. If you think about Ethereum holistically as this platform, what are the key properties that centralization at the builder level degrade? And that is exactly censorship. They can't do any of the other nasty things like double spending or reorging things, and but censorship is a problem. It is. I think it's not like, at least historically, it hasn't been a case that it's been a big problem, but there's some soft form of censorship. You can delay transaction potentially for a few blocks, or other kinds of games that you can play, but it's not something you can't really prevent people from getting on chain. But that being said, we want to have a really robust system, and so there are things that we are currently testing on testnets, and that have been inspired by lots of ideas and research done by others in the ecosystems around inclusion lists, and also about merging blocks, which is very similar to some of the ideas behind multiple concurrent proposals, if you remember, where you basically ensure that there's not only one path that exists in order to get on chain for a specific slot. And so that helps the censorship of potential private transactions, and allows you to get on chain without having to be in the public mempool, versus something like inclusion lists, where especially also if it's non-state sensitive transactions, you can just post your transaction in the public mempool, and there are some rules that enforce basically that a block is only valid if you include those transactions. These are things that are already being tested on testnets, and in the process of probably coming to mainnet very soon. So we are definitely always still thinking about those fundamental core principles and properties that we want to maintain as Ethereum, because at the end of the day, it's just, unless you're very super short-term focused as a business, it is very much in the incentive, even from us, just from a business perspective, that the core properties of Ethereum are maintained, because we are so dependent on Ethereum, and if Ethereum doesn't do well, then we don't do well. And so I think long-term, those incentives are just very strongly aligned. But then also the second part of your question, I very much agree with, and we've seen this, if someone had a bug, or we have had a bug at some point before, and then we are down for an hour or so, and it's like not a problem. Like the chain ticks on. There are lots of other builders that basically step in, and their market share bumps up.
Yeah. Technically, the chain is still dictated by proposers and the testers, right? So the only reason why you have censorship powers and like in practice is because right now the way the pipeline works is, I suppose it's like, hey, either like it's sort of all or nothing, like take my whole block or nothing, and there, like, it's a simple auction where the block that pays the most will always win the validators' votes, right?
Yeah, exactly.
So but technically, like, if the validator were to just like basically use an API for receiving blocks that already aggregates like a market or something, like it's basically up to the validators to configure the software in a way where they can have dynamics where, yes, maybe they still get take the highest paying block, but I don't know, people that are being censored by one builder maybe pay an extra premium, and at some point they can outbid the censor, right? And they can get their way in just by paying more, right? So I think ultimately, technically the builder doesn't have control, right? It's just a sort of market outcome that seems to be this way, but technically it's always up to the validator at the end of the day, right?
Correct. And with things like so commit boost, which is basically this sidecar that validators can run to connect to the PBS MEV boost pipeline, but it's very modular, and the intention is basically for proposers to potentially have now the capability to expand the expressivity over how blocks should be constructed. And today it's very much like you're saying, it's like, I don't care what's in it. I think you do have some optionality. You can say, hey, I want you to be compliant with the OFAC list or not. So you can express that by connecting to specific types of relays. But other than that, it's just like, give me what is most valuable. And so adding some granularity there in terms of, okay, adding some policies, how you want those blocks to be constructed, that's very much possible. And so, for example, today there is this sidecar called Commit Boost, which is modular, and the idea is basically have the possibility for developers to come in and build new types of modules that then can allow proposers to express or just expand their expressivity when it comes to block construction, amongst other things.
Yeah, cool, nice. So describe to us based sequencing. Why are you doing it? I mean, just like you can be super technical on this podcast. We can assume that listeners know what rollups are and sequencing and this and that. So otherwise, just go to the Gelato blog. We have like insanely good educational material on how rollups function. What is the difference between a rollup and an L2 is the one that I personally like. I mean, there can be the same, but there's differences. And for basically the simple definition of a rollup is it basically posts its block, publishes its block on another blockchain, and the rollups blocks ultimately, when finalized, are anchored into another blockchain. In this case, Ethereum as the so-called DA and consensus layer, data availability and consensus layer. Ergo the sequencer, essentially the layer that sequences transactions and forms a blockchain. This is ultimately in the rollup or L2 world. That's what the DA and like the DA and consensus layer does. And in base sequencing, the idea is that you don't have a like sort of L2 sequencer per se anymore. That is like a centralized sequencer, single sequencer that quickly gives you pre-confirmations to make it seem like everything runs faster, when in reality you have to wait for slow Ethereum to finalize your rollup chain. Base sequencing, the idea is you have this notion that the rollup at all times is confirmed already by the base layer, and the users don't have to have that fast UX that they enjoy today on Arbitrum or Base, which completely is trusting Arbitrum or base sequencer for those, at least those seconds that you shave off the Ethereum posting time, batch posting time, and so on. The idea with base sequencing is sort of you get that fast, like millisecond, like hundreds of milliseconds experience or less, but you have guarantees from the base layer that can be considered almost as good as basically just being finalized on the base layer already in that instant. Would you agree with this sort of concept? Basically,
yes. So I think you explained it very well.
Basically, base sequencing, I think, for me, like base sequencing is very much intertwined with base preconfirmations, right? And I feel like Gattaca is approaching the whole topic very much from the base preconfirmation topic, bringing in the validators and so on that are required. Because there's also this other idea of base sequencing, which I like, which is actually funnily how Arbitrum, for example, worked in the very initial phases in 2018 or whenever they first started cooking. And which is similar to an idea that Vitalik proposed ages ago called total anarchy. And in this, there you don't have pre-confirmations. There, like you can have a roll-up where every user literally posts their transactions directly to the L1, directly to the DA layer, and then the roll-up execution, basically client just essentially like iterates over what has already been finalized on the L1. The reason, like, why is this not a popular model? This is super decentralized, right? Like, you literally only have the rollup doing execution. That's it. That's what a rollup is meant to do. An L2 at least is meant to do. And you have everything else done by the layer one. But of course, we know Ethereum is damn slow. So that would mean everybody would have to wait 12 seconds and then actually a bit more to really wait for finality. And of course, here, one of the things that Arbitrum and OP and so on realized early on is, oh, let's just put a centralized sequencer server there. That gives out these fast confirmations, and we promise the users to post later, right? But that ultimately you can have base sequencing without base pre-confirmations. But I think when I'm talking to you, we're not talking about that. We're mainly talking about the variant that basically says, hey, we also want to have speed here for users, and we have a way to hack the base layer mechanism to deliver that speed similar to what you would get from a centralized sequencer. So that's my long sort of, prepping you for yeah, what is Gattaca, like how are you approaching this problem, and what do you want to build with it?
Yes. Okay. So great primer. So all aligned here, and so from our perspective, the concept of base sequencing made sense, both from the perspective of, hey, there's Ethereum that provides these services, which is settlement and DA. Why not also provide sequencing, which creates more value for Ethereum as an ecosystem? The L1. Two, the addressing some of the challenges of having all these different rollups with their different sequencers, where it just creates this fundamental, it breaks up the composability or the DeFi money Legos, right? So the way Ethereum chose to scale across rollups created these different pockets of activity where it's very hard for you to build on things that don't happen in your local ecosystem. If you think about rollups and the L1 itself, and then lastly, also some of the risk of operating a centralized sequencer, both operational risks from the rollup operators' perspective and regulatory, but also just in terms of the general resilience, and obviously you also have different stages of rollups and so on and so forth as per L2 beat, that then can help alleviate some of the trust assumptions there. So I think base sequencing basically is this concept that solves all these issues. And now the question though is like, how do you make this a reality? Especially when you have path dependency of what the status quo is today, and you have incentives of all different types of participants in the ecosystem, where maybe in the short term, it might actually be better to just have your own sort of isolated island, especially if on your island there's so much activity, and maybe you don't want to share those resources with other islands. Although probably in the long term, it will make more sense for there to be more interconnectivity. Then also in terms of the robustness of the mechanics of implementing base sequencing itself. So you can have this fully trustless model, total anarchy, also something that Tycho launched with, and then recently starting to transition out from. That is not very user-friendly, right? Again, and like at the end of the day, if the product is not really serving the need of the user, then that product will not gain adoption, right? And so again, like taking all these things to account, like how can we build a system that checks boxes across the board? And so the most viable path we saw, and again, this is not our idea, we didn't come up with it. Like a lot of this was led by Justin Drake, who is one of the leading Ethereum researchers, and a lot of teams that have been talking about sequencing and thinking about these problems. So none of those ideas are really things that we came up with. But we came more at it from a perspective of, hey, given these ideas, how can we, from a more pragmatic and practical perspective, make this a reality? And so this is basically where the idea of based OP came to place, where it's like, okay, hey, we don't want to potentially have to create new rollup ecosystems that from day one decide to become a based rollup. We already have Tycho trying that. We already have a very active rollup ecosystem with a lot of activity. One of the dominant stacks is the OP stack by far across rollups at scale. And so how can we give a path to rollups that are already operating at scale to use this better form of sequencer, and making sure that every step of the way there are like real practical incentives to do so. And then also just thinking about it from a system design and a risk perspective. If you have something that is in production that is like processing a lot of transaction and has a lot of TVL, you don't want to just like overhaul the entire thing completely, because there's a lot of risk migrating a system that is operating in production at scale. And so the idea with based OP is basically, hey, we have the OP stack, you operate a centralized sequencer. Let's start adding features to these centralized sequencer that basically just provide this very pragmatic path to becoming based in the long term. And we can do this by going through different phases. And like you said, today's centralized sequencers already give relatively good UX through these confirmations. But then actually we can already do better, right? And the status quo for OP change was 2 seconds basically of confirmation times, which is a lot better than 12 seconds. And so with based OP, basically we said, okay, how about we start just unlocking the pre-confirmation feature first? You still have a centralized sequencer, add pre-confirmations to it. That's sort of the phase one. The next phase is, hey, instead of having a single centralized sequencer, how about you support a rotating set of sequencer, again, to lay the path of having multiple sequencers without impacting the UX. Now, use some crutches along the way. For example, it can't be permissionless from day one, because there are just a lot of things that can go wrong. And again, going from, hey, I'm the rollup operator, either I work with a provider like Gelato that operates this sequencer, or I operate it myself, versus, hey, anyone can now sequence my ecosystem. That's a lot of risk, and you need to sort of give them sort of these like stepping stones to get there. And then the next phase basically involves, hey, okay, now you have pre-confirmations, which are much better in terms of UX. You have a rotating set of sequences, which create more robustness, and so on and so forth. Now let's overlay this with some economic security, so that the guarantees that the sequences give you are not just backed by trust, but by economics, just like the L1 is itself. And then the last step basically is then, hey, you have a rotating set of sequences that are backed by economic guarantees. Instead, you can now open that up to become permissionless. But in order to be a sequencer, you have to be a L1 proposer. And with that last step, not only do you now have the full sequencing capabilities of the L1, but now you unlock this thing, which is synchronous composability with the L1, which is the key sort of thing that got broken when we chose to scale that way. And again, that's sort of the North Star that we're also working towards. But then we're basically just providing a very practical path to get there by just adopting features step by step.
Cool, nice. Let's unpack that final phase, the actual based sequencing in phase 4, I think it is, where essentially what does the end state look like here? A rollup that uses Gattaca's based OP, and we are already dabbling with it at Gelato. We've been trying it with our partner Kraken for their ink chain. They've been quite excited about that project, actually. I think they also talked to you guys a couple of times. So we already are, like, we have seen at least the fast pre-confirmation stage, which is, by the way, like, I mean, OP already has pre-confirmations. They're just centralized, and I think in your first phases they're also still centralized fairly, at least, but they're just faster than the 2 seconds that OP can do. Similar to what Flashbots has with Flash blocks, you guys have a competitive sort of product in the market that you have launched, which also gives essentially OP chains like 200 milliseconds or less, I think, in terms of user experience for blocks. But yeah, let's focus more on the actual end state. Like the key difference here to decentralized sequencing, right, or shared sequencing, which was like a notion that was popular 2 years ago and never really went anywhere. I would argue decentralized sequencing also didn't really take off in a big way for the rollup market yet. But the key difference to just having like a consensus at the L2 sequencer layer that is decentralized sequencing, like a simple round robin or a more like a different consensus, is actually the set of sequencers that participate in the base sequencing and base pre-confirmations. They are also like, they're congruent, like they're basically the L1 proposers, right? So to be able to even sequence the rollup, you have to be a proposer at a certain slot. I think what this unlocks, by the way, for me, first and foremost, what I find interesting is you can decentralize the sequencing, and it happens that you use L1 proposers for that. Like, but that's already pretty cool because and there's a great set of sort of decentralized infrastructure that you can leverage that is incentivized to join your network. Because I mean, from your perspective as a builder, you would probably tell me, hey, if my L1 blocks can now include sort of rollup transactions in there, then maybe there's some extra fees that can be extracted, and maybe the validators or the proposers on the L1 actually get more from also sequencing these rollup blocks, right? Like, I think this is how you can bootstrap a decentralized sequencing network, because these guys already have infrastructure running. They're already paid from the L1, and it's very easy for them to add like another rollup, even though it might not net them that much extra profit, right? Versus convincing a whole new set of sequencers to bootstrap a new rollup network, which doesn't have much profit. Like that's a super hard thing. You probably have to issue another token and inflate a token. Here you have this idea like, hey, Ethereum already has this infrastructure. They already have their baseline cost covered. They're happy for every little bit of net profit that they can add to it, especially if it's nicely packaged up in a new pipeline, which is sort of what Gattaca is building, like this new base pre-confirmation pipeline, where similar to MEV Boost, these L1 proposers, they just have to use a new client or something, and they will be starting. They will start sequencing based rollup blocks without even knowing it, other than installing a new piece of software. I suppose they just get more for their blocks on L1, right?
Yes. So this is actually an important point. And as people who are not as deeply familiar with this might question immediately, hey, today the proposer is barely sequencing L1 blocks. How are they going to sequence rollups as well? And so here we're basically building upon the principles of PBS with some additions. And the idea is basically, hey, there's one party for 12 seconds that has a monopoly and the authority of what happens to block space within that time frame, but they don't necessarily have to do the heavy lifting. They can outsource that to sophisticated actors. And the key part is that this the proposer is, however, responsible for policing that actor, right? And so making sure that the right mechanisms are in place, so that even though it might be a sophisticated actor like a builder who's building the blocks, that you don't just give them like a blank slate. You create these rules that they have to adhere to in order to be able to sequence or like provide a service for you. And that's part of the agreement, I guess, between the proposer and this service provider. By the way, the lingo and the basic sequencing movement generally is for this actor is a gateway. And the gateway is basically this sequencer that acts on behalf of the L1 proposer in order to issue preconfirmations and sequence the transactions on their behalf, and then the proposer just signs off at the end.
Yes, and this gateway is akin to like a builder, like this is gonna be vertically integrated, right? Like at the end stage, most likely Titan will be one of the dominant gateways, right? Because essentially a gateway is literally like a gateway to having, you can think of it as like you right now as Titan, you're building big L1 blocks, right? And with base sequencing, essentially your L1 blocks will also include sort of roll-up blocks in them that are like introspected, sort of like another block within a block. And with the gateway preconfirmation architecture, you can sort of auction off these blocks as well and sell them to L1 proposers, right? Because these based roll-ups, essentially, they will seal their blocks if an L1 proposer essentially sealed them, right? So it's like an overlay of consensus on the L1. The L1 has a protocol like Ethereum, whatever, like proof of stake, right? But here we're building a new form of consensus for the rollups that participate, which essentially say, hey, I'm willing to join this sequencing network of L1 proposers, and I'm gonna like sort of access this via a gateway. And now I'm gonna start auctioning off my rollup blocks to the gateway, which is essentially like the L1 builder. And what do I get in return is, I mean, like I just described, is like you get decentralized sequencing, and you don't have to bootstrap a random new network. You get like the interactions here, like the barriers to entry and the friction is the activation energy is very small, because these L1 proposers, they already know MEV boost and PBS, and they already sort of do this similar thing. So convincing them to join this gateway fund is not going to be a big leg up versus completely spinning up new infrastructure just to do decentralized sequencing for rollups, right? So I'm super bullish on this alone. Am I correct in this? Like,
yes, so absolutely. That's a good insight. And the other point is also that because proposing is generally very commoditized in terms of the yield, node operators and proposers are generally always looking for places to unlock additional yield. They're locking up this capital, which is 32 ETH at a minimum or more per validator, and they want to maximize the yield. And so again, if I'm providing this economic security for Ethereum and that capital is locked up, can that be used for more? And can I provide more services? And so this generally, again, with just a bit of incentive, that can be enough to just like get these different folks to sign onto this, versus like having a third-party network that then has to bootstrap its own validator set and so on and so forth with its own token. And yeah, again, the economic security that is needed to then actually secure that network, that cost of capital needs to be justified, right? And so you need to just generate a lot more fees and yield. So potentially you can bootstrap it with incentive, but then again, if you're building something for the long term, are the fees that are generated by that enough if you're not also generating fees through other things like L1 proposing?
Yeah. By the way, do you have a little bit longer? Like I have a 15-minute buffer.
Yes.
Myself? Okay, cool, nice. Because I feel like I already knew 1 hour wasn't enough. So anyways,
I planned for that.
My mistake. I know you're a busy man, so I figured let's try, but it never works. So yeah. By the way, like this is such a bull case for the ETH maxis, right? It's like, okay, everybody's a bit disillusioned with the way the first wave of L2s worked out. And by the way, if you want to see my vision for how we can fix L2s for Ethereum, read my post on ETH Research. It's called Ethereum Settlement Score, ESS, Revitalizing Ethereum's Rollup-centric Roadmap. I posted that a couple of months ago. I had it on my shelf for much longer. But a key aspect of the post, if you read it, you will find out is like, hey, shit has to become based, right? Like L2s have to become based. And Gattaca is one way to do that. And that's like a major part. There's other things in there like ZK, fast settlement, and so on. Actual empirical things like using canonical bridges and not third-party bridges and so on, like to make the rollup really like Ethereum. But I think already it's so clear that if through the gateways, essentially, let's say we have like a perp dex, like we're working with the team Raya, right? They have an orbit chain with us right now. They wanted to launch a new L1. I discussed it with them and essentially convinced them that if they want to change the chain setup, they shouldn't go for an L1. They should rather become a base rollup for various reasons. And but it's already like clear that, hey, like there's a clear way now for Ethereum validators to earn more yield from the Ethereum operations directly from these rollups, essentially through very similar means to how they already generate yield from your operations as Titan today. So I think this is a very clear path to showing how, as Ethereum validators, you can increase your staking yield basically from these rollups. So before we go into the other bull case for this, which I know Justin Drake loves, I personally wasn't too excited about it, but I actually see it a bit more now, is the sync composability one. But before we go there, like what's like there to lose for the validators? Because this is out of protocol in a way, right? It is like an extra service, and it should involve, I suppose, staking, because rollups are blockchains. And they also want to, like the hard part here is, as we said, the preconfirmations. We want rollups to be fast blockchains, but Ethereum isn't fast, right? So someone is abstracting latency here. That is gateways and by extension, the L1 validators. How are they penalized for not essentially adhering strictly to their preconfirmations, essentially breaking them, or what I call pre-maybes, right? So how is that actually going to work? And we know it's sort of slashing, but how do you see that? Like, I know it's in the future, but how will that look like?
Yeah, so slashing is essentially enforcement. Like the simple example is, hey, either I directly or someone who acted on my behalf committed to executing this transaction or including this transaction. Then the block was produced, that transaction wasn't executed or included in that exact form that it was promised that it would be. And for that, the proposer would get slashed. Now, if you use a third party, so if you are not sophisticated and you use a gateway, basically the mechanisms now that slashing will translate into slashing for the gateway. So in the designs that we are currently working on, basically the gateway also puts up collateral. And so if the pre-confirmation was reneged on because the gateway was responsible for sequencing, they essentially would get slashed. So they effectively wouldn't be at risk for outsourcing the sequencing to someone more sophisticated. That makes sense.
Yep, and the slashing itself, it is out of protocol, right? Like we are really, like, I think this is usually where it gets a bit harder to understand. Mm-hmm. We are using L1 validators, and Ethereum is being used heavily. Yep. But Ethereum, the protocol doesn't know about our rollups and their sort of slashing rules. I mean, the slashing rules are going to be very simple, akin to an Ethereum blockchain, which is rollups are blockchains, and they don't want their blockchain order, which was confirmed, be reversed, right? Somehow, mm-hmm. Either by like essentially transactions suddenly disappearing again or being in a different order, right? Like this is why blockchains are sequences, strict sequences, right? Mm-hmm. And somehow humans find sequences very important, which probably mm-hmm. has to do with the fact that we have time in our world, right? But that's another conversation. But like it seems like life is everybody's just a sequencer, right? But but yeah, so these rollups are sequences, and a break of a pre-confirmation, like a base pre-confirmation, just allows them to be fast sequences on Ethereum, faster than Ethereum itself. So I always say, like, it's like time traveling. These base rollups sort of live in the future of Ethereum, and that future comes to be exactly that way as pre-confirmed, right?
Yes.
So there's basically predict Ethereum's future, and then it comes. And the whole point is, like, it actually comes like that way, right? Like, if a prediction doesn't come this way, something didn't work. So the slashing rule is basically like, hey, your chain pre-confirmations, they were unchained somehow and reversed, right? Very similar to how Ethereum L1 works. That's the same thing basically. But how is it implemented on? How do you think about it? Is it going to be a smart contract on Ethereum, and we actually finally have a use case for eigenlayer? Is Ethereum going to be very happy here, or like how is it going to work out?
Yeah, so there are actually a bunch of AVSs on eigenlayer that are basically supporting pre-confirmations. There's also this we call the URC. Basically, it's supposed to be the universal registry contract, which is the one point everyone can look at for who is the sequencer, who was responsible, and who needs to be slashed. And the way to think about it is, hey, there's a smart contract. A pre-confirmation will be a signature on some message that confirmed that your transaction was included or executed, or whatever type of pre-confirmation you asked for. And then if you submit that signature to the contract with post the block actually having been proposed, and with a proof, basically, then the counterparty that was registered through the URC will get slashed. Simple as that. So it is a contract that's not part of the core protocol, but there's this one source that is intended to be the universal place to look at who is doing the sequencing for the current slot and who's responsible and who will get slashed. And it's also designed in a way to be compatible with various forms of restaking, eigenlayer, for example, but potentially other providers as well.
Cool, right. But like at the core of this is the concept of restaking. And Ethereum has like a minimum validator stake of 32 ETH or something, right? But here it's more like a sort of, hey, as you build your base rollup, you sort of have to negotiate with a gateway and the validators underneath in terms of, okay, what's the minimum stake for sequencing my rollup here? But it sounds like the cool thing is that the oracle, for the slashing oracle, can use a lot of data from the L1 itself, so the data model is very trustless, sort of, to enforce the rules.
Exactly, and I should also add that it is also designed in a way that if you don't want to restake, you can actually also just put up collateral directly. So you can just put up some ETH in addition to maybe your 32 ETH as a validator, and you don't necessarily need to restake.
Yeah, cool. Gotcha. Without going too deep into the dynamics of restaking, super cool. All right. I think we've sort of unpacked how base pre-confirmations can work. For me, it's easy to understand the value and how they work in the simple use case of, hey, your rollup now has a decentralized sequencer that is sort of, confirmed by L1 proposers, and they don't need to bootstrap this new network, and therefore you can probably win them and they will sequence your rollup. But the holy grail of all of this is the sync composability, right? Which essentially says, hey, there's like a whole unlock here whereby if you can, if Ethereum sequences your rollup, then you can technically submit a transaction to Ethereum and to the rollup in synchrony, right? And of course, this would unlock major profits of value extracted or generated even from essentially really unifying rollups with Ethereum block building, where, for example, now if you have trading firms that are using Titan, they can suddenly, like, let's say you have like this amazing perp-based perp dex like Raya on Ethereum, right? And suddenly you can execute trading strategies synchronously between Ethereum and Ethereum exchange, let's say Uniswap on Ethereum, a spot exchange, and a per position here where you're hedging the spot exchange, and the operational execution risk has been minimized because of synchrony between these two venues, right? Essentially, you can almost have like atomic execution between them. Here, I always struggled a little bit to understand, like in practice, how this can work, because what base preconfirmations give you is the first stage of things that you want from base rollups. It's like atomic inclusion, like, okay, you will be included in Ethereum. But what they don't confirm to you is how, like, how that relates to the Ethereum block around you at the time of inclusion, and especially like a thing that we call atomic execution, right? Like, so how does that work? Like, because what I'm struggling to understand is, let's say you have this simple example, like, I now wanna buy this Uniswap thing on Ethereum and I wanna hedge it with a base rollup. Now on the base rollup, like, you can, okay, I guess you can give your transaction to a builder. That builder will confirm to you that they will include your Uniswap trade on Ethereum like so, and at the same time they will confirm to you that they have taken out the short position on the rollup or something like that, right? Like, we're really getting in the weeds here, but you always have this thing where there's like some uncertainty on the layer one left over, right? Like how can you sort of synchronize these systems is, I guess, my question. Dealing with the inherent differences and latencies on the L1, where there might be other proposers and other builders and so on. I mean, other proposers not, but other builders.
Yeah. So the key is basically that there's one sequencer. So there's a shared sequencer, and for the 12-second slot duration, you have one sequencer that sequences the L1 and other domains, i.e. the base rollups. And so that sequencer is state aware of all of these domains. And the key thing being that sequencer is the sole entity that is allowed to advance state across these domains for that duration. So given that sequencer can now give guarantees about that state, because no one else is able to advance state across these domains. And so I can say, hey, I'm sequencing, let's say Rhea, I'm sequencing the L1. What was your use case? Some hedging position on the L1, right? Okay, versus executing the perp on Rhea. You can do that because you can actually execute both at the same time. And then you keep building the rest of the state, whether it's one single block on the L1 or lots of Rhea blocks at the same time. You can start building the L1 block here, and you can make sure that state transition is valid, and you keep progressing the chain, so to speak, from a transaction perspective on an ongoing basis, because there's no one else that can come in and then slot in another transaction that might invalidate that state transition, if that makes sense.
Yes, this is my understanding. Like, essentially the mental model is you have the L1 block, like proposer, like the sequence of the L1, and all of the domains that participate, and that is the same sequencer, right? Because by the definition, base preconfirmation means the L1 proposer is also the sequencer for your rollups. So this L1 proposer now is supercharged. It has all these other rollups, and it has acquired like a lock on these rollups, so it can sequence all of them synchronously. That part I get, and that's super powerful. But like, what I didn't quite add together is normally we have the notion of base preconfirmation. So that means that actually when your rollup gets the confirmation, it's not even the L1 proposer's time yet, right? Or is it? Like I thought that there's this concept of, okay, the L1 proposer includes you in a slot when it's their turn on the L1, but we have to wait for that, right? So actually the state on the L1 that you wanted to compose with or synchronize might still change until we get there. Or
I see what you mean. Okay.
Yeah.
So I think you're talking about the concept of not having all L1 proposers opted in.
Yes.
And so then if you have a gap in the L1 look ahead, there are a bunch of proposers that haven't opted in. And then let's say slot N+5 is the one that opted in. That sequencer can give pre-confirmations on the rollup for all the non-opted in slots. That is correct. But that sequencer cannot provide synchronous composability for slots that they actually don't have the autonomy over. So you only have synchronous composable slots for slots that you actually have L1 proposers opted in.
Okay, so my problem statement is simply solved by, hey, synchronous composability is a feature that is available at times. Ergo, when we have the coincidence that when you want a pre-confirmation and place trades on your rollups and synchronize them with the L1, at that very time, the L1 proposer that is also your rollup sequencer also is the L1 proposer, right? So
yes, and
we're in an epoch or in a slot where they are basically already have, like in real time, have the block building rights on the L1.
Correct. And the way to think about it is basically synchronous composability is doesn't work as well if you don't have most of the L1 proposers opted in. But as soon as, like you say, you have the majority of the L1 proposers, then for most slots you'll have someone that's opted in. That means for most slots you have synchronous composability with the L1.
Cool. Yeah, gotcha. So synchronous composability will work better the more L1 proposers participate in that rollup domain.
Yes.
This risk, right? Like these gaps, right? These gaps that make offering synchronous composability harder, especially with pre-confirmation, because the pre-confirmation is essentially a prediction of the future. And if you have state in between that could mutate the state that you base your prediction on, it's basically virtually impossible to give a confirmation, right?
Yes.
But like here, like, is this essentially, I suppose the proposers aren't dealing with that complexity. This is the gateways, right? And you guys at Gattaca that are essentially running like a risky business of sorts, which is like, hey, we want to provide atomic execution, like above and beyond what the base pre-confirmation provides, which is atomic inclusion. Actually, we as a builder shop also want to provide atomic execution as a service feature to our like order flow originators that give us the flow, right? Like, I suppose that's how you think about that business is, right? And you then need to make a decision, is it safe to give atomic execution guarantees at this time for my proposer that might be slashed alongside me if it doesn't work, or especially as a service on top for whoever is sending me the flow, right? Because what could go wrong here is actually you get included, the proposer did everything right, but the trade executed not synchronously in a way that you thought it would.
So yeah, the way we are currently thinking about it is in the bootstrapping phase, we will most likely only give pre-confirmations for the base rollups themselves within their domains and across base rollups, right? So you can have pre-confirmations or atomic execution across base rollups, even if you have gaps in the look-ahead schedule, right? But then we would only ever give a pre-confirmation on atomic execution across the base rollups and the L1 if we know we have a guaranteed proposer that has opted in and that can actually provide that guarantee. Otherwise, we wouldn't actually accept or commit to any atomic execution for slots where we might not actually be able to build a block, if that makes sense.
That makes sense. And there's an important distinction here, which is you have composability, synchronous composability across base sequence rollup. That's a super nice unlock. You have like rollup-to-rollup synchronous composability if they both participate in the same base sequencing protocol. And that is easier for you to manage even with gaps in the look ahead, because essentially for the rollups, like you have this perfectly synchronized lock, right?
Correct.
But on the L1, we have to interleave our weird little rollup protocol here with the other like workings of the L1, which at certain slots might not participate in our little party there. And that's why like you can't offer the same service at launch so well at all times for this other synchronous composability, which is the L2 and the L1, which is, of course, super cool because that's like the holy grail, because you have so much on Ethereum already. And if you can, like so much trading, so much stablecoins, so much liquidity, and if you can enable like trading between the rollup and the Ethereum L1, then of course that's like that could be super strong. But yeah, I think super nice to dive into the nuances here with you. Unfortunately, we have to end here. Like I could go on with you for much longer, but actually, I was great to get to hear it from the horse's mouth, as they say, like as to how this stuff will work. But then I think I understand it correctly, and you've definitely helped me understand it better and make sense of it in my head. At times I was thinking, am I missing something? But yeah, I think there's a path there. Yeah. So last question before we end. I think there's massive support from this inside of the EF. Justin Drake is like the sole man that is sort of carrying the torch forward for base sequencing. And there's even been rumors that some people inside of the EF are opposed because it could lead to further centralization risk or whatnot. Like we don't have to dive into those. But do you think this is sort of an unstoppable force? Like if you build the tech with Gattaca, if you like the economics of it work, I mean, it has to be interesting enough for the rollup operators as well, is where Gelato comes in. We are interested, and some of our customers are interested, like Kraken. Yeah. So do you feel like this is an unstoppable force, and it doesn't matter so much what the EF thinks about this? It's just gonna happen similar to sort of how Flashboards build like the whole like sort of MEV pipeline, pretty much like with MEV boost and so on. They were pretty much driving that outside of the EF, right?
Yeah.
Is it the same here, or do you rely, would you say, on Vitalik sort of being happy with this?
Well, I would say in general, the researchers at the EF have a good understanding of a lot of the fundamental problems, and their main job is to make sure that the soundness or the robustness of the core protocol. And that was the intention behind something like Ethereum. Like it's supposed to be this like World War III proof and like civilizational grade infrastructure, right? That should be hardened against like actual adversarial actors, right? That are trying to potentially take this down. And so I think in general, whatever happens outside of the protocol, in terms of the markets and the dynamics that are forming, they keep an eye on it and make sure that the core protocol doesn't get compromised. Now that said, like all of these things can happen completely out of protocol, which is quite nice, and which also often is looked at very favorably from the EF perspective, because these systems are so complex. We can reason about them as much as possible and even have some play out all the game theory, have some agentic systems and models, and play them out and so on and so forth. But there are just so many factors that you often can't consider until you go to production and have actual real usage. So often these things are very much encouraged to happen out of protocols, so we can learn from them and then either adjust the protocol itself, or in some cases actually bring some of these things into the core protocol, right? Similar to PBS. PBS happened out of protocol, right? And it has been since the merge, right? And it's only now one of the contenders for inclusion now in the next hard fork, right? And with that, a lot of the learnings of like, what are the actors, what are the incentives, and are being considered when like putting these things into core protocol, because once they're in, obviously changes are much harder to iterate on. So all of that to say, this can happen completely out of protocol, and like with anything that happens in this space, there's never gonna be I have never seen anything that is a big change that everyone is supporting or everyone is opposing. And generally, if there's more support than against, and because most people that are actually involved in building this infra actually also care about Ethereum, is same like you guys. You don't want to like mess up Ethereum. We don't want to like destroy Ethereum or anything. So I think overall that coupled just creates a scenario where there might be some pushback, but then also there's a lot of support, and then generally most people are not out there to destroy the system, and it's looking very much like if this is something useful, then it will happen. And so yeah, I think that would be my perspective on this.
Yes, and I think the hard part is getting the rollups to deploy with this, and getting them to sign up. I mean, the other hard part is recruiting the stakers, but like I guess you can go via Lido or something. But once that match is made, it's very easy to convince the ETH hodlers like Tom Lee and so on to chill this, because this is one way to increase the staking yield, right? And without further ETH issuance. So it's amazing, actually. I think I'm a bit more bullish on ETH after this podcast, I have to say. Quite a bit.
Nice.
So yeah, thanks Kubi. Thanks for coming on. And yeah, we have to do this another time again.
Yeah, absolutely. Let's do it.